Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. What do you pay for gas? What about your food? Has your energy bill risen at all? Yeah, I know. Everybody's paying more for everything. The question is why? Why is that happening? I'll answer that, and I will give you the signals you need to pay attention to that are going to be very important in the coming months. Let's begin. Pain at the pump. Gas costs nearly $10 a gallon at this California station. This happens to be in Mendocino, but you look around and it's kind of the same everywhere. Whether you're paying $9.50 in this example, or $8 and change, or $7 and change, we're getting there. Okay, we're getting there. You're always going to have fluctuations. You're always going to have one thing that's more expensive than the other in one place than the other, but everything is going up. But at this time, it's not just oil, it's not just gas. We're seeing it in every category. But some people are making more money than ever before. In fact, oil execs cash out like crazy while gas prices soak Americans. That's right. If you take a look at these examples here, they give you a few. These particular execs, it's a lucrative time to offload shares. That's right. They're saying it's not good optics to do so, but what happens? Look, it is very, very common that these different executives, maybe it's the CEO, maybe it's a director, and so on, the way that their compensation is met is basically when the stock hits a certain price, they can sell off their shares. They basically claim those shares and then sell them off. So their salary might not be that big, and might want to put that in quotes, but their total compensation includes these stocks. They have to get to a certain point, and usually what happens is they use stock buybacks. The stock buybacks, they know this, push the stocks up. So we have these periods of time in which the stock will move up considerably, and then they take it at this point right here in order to cash out. Now they might cash out on these, like they might hold a certain percentage and not sell them. They don't sell all of their stocks, but they use these periods when the stock gets boosted up for whatever reason to sell off. And we saw that with, GameStop. It was happening all in 2020 and, even 2021. We were seeing that with Zoom, like all these different companies, they were rising up to levels, and the executives were saying, I'm going to cash out some of these things because this is just fantastic. And, it's hard to blame them for wanting to cash out while they can. But what's happening here today is that we are encountering a time in which the signals are coming at us. We are watching a debt crisis, a 2000 style bubble, a 2007 to 2008 style housing crisis or housing boom, and just add up anything that you can think of from previous crises, 29 and so on, all at the exact same time. And this right now tells us that we are going to be in for a rude awakening. US car sales are at recessionary levels as inflation and rising interest rate concerns increase. May auto sales were sour as shortages and other snags remain hurdles. You see this, it is very clear that you go to the showrooms of these different, retailers, and they are empty. Now, what's happening behind the scenes, I don't know, but you can see that that is very, very key at the retail level where they just don't have the vehicles. At the same time, they're going to be borrowed. I've shown you before. I told you 100 times. The same with real estate, with cars, and so on. People are stretching the purchases over a longer period of time so that their bill can remain the same. Oh, that car costs more? No worries. Instead of paying it over 4 years, I'll pay it over 8 years or whatever it is. The average, I think, was 6 years or 8 years maybe. I remember covering it here before, to pay off a vehicle. So during that period of time, interest accumulates. But what's going on when you have interest rates increasing? Of course, that's going to have an impact. It's the same with houses. And of course, all the materials that are being used right now to make up these cars are increasing in cost as well. So they translate into higher prices that people are paying. Exclusive. Elon Musk wants to cut 10% of Tesla jobs. Tesla employed around 100,000 people. So 10% cut, that is quite significant, okay? So he's just basically one individual, one company, but it does tell us, it's kind of a bellwether in a sense of what could be coming. So watch the different CEOs, watch the different presidents, watch the different individuals who are in high positions and what they're saying about not, the world and not what they think, their opinion, but what they're saying about their own company. And then look at the actions they take. I showed you Goldman Sachs president. I showed you the CEO of JP Morgan. I talked, I'll talk about another one in just a second here. They're basically all saying, watch out because something's going on. And this recession that we are basically going through at the time is a big concern because it's not just one factor, many of those factors being out of the control of the individual corporation. We know this. Lumber prices slump with rising interest rates. And of course, lumber is one that's been really exaggerated on the up and down. But what does that mean for housing? Well, of course, it's essentially in this article here, they tell you it's that as the prices had moved up considerably, it put a real dent into what homeowners can afford and people renovating and so on. Now we're watching the big changes occurring, and that could be a signal because it tells us, look, if the demand isn't there, well then, what's happening with the real estate market? Investors may be in for this rude surprise. History shows inflation can take years to return to normal, even when the Fed hikes above 10%. Now, hiking above 10% doesn't necessarily happen very often, and I don't know if they'll ever be able to get there. But the point here is that, as you see, there are aspects of the historical pattern that are very relevant. Namely, inflation took a number of years to develop, kept growing, receded, and then came back and was hard to get rid of. So if they don't do the job in the first place, then you've got a bigger problem later on. You see the dilemma that they have? It's not as if they can tiptoe their way and make it work. That doesn't happen, at least historically. Now, many have said what we are seeing today, the inflation, is because of, lockdowns and supply chain and all these factors that eventually will slow down. Inflation comes down. The central banks don't need to increase rates as much. And so we have a soft landing. We'll see. Because when you let the genie out of the bottle and you print all that money and you do the deficit spendings and you increase the debt and so on, anything's possible. But don't worry. Your friend Lloyd Blankfein says dial back on the negativity over the economy. That's right. He's going a different route than Jamie Dimon, and I found it interesting to say the least. But this was from a tweet actually that he put. I thought it was just funny. Dial back a bit the negativity on the outlook of the economy. I'm managing a big company, of course. I'm preparing for the worst, but the economy is starting from a strong place with more jobs than takers. That's true. And it's adjusting to higher rates. Riskier times, but may yet land softly. And I did a quote of this tweet on my Twitter. Check that out at the Money GPS. Basically just saying, we'll revisit this in a few months. So I'm interested to see what happens over the next little while. True that the jobs market is looking good. Okay. And I don't know if I, put that up in this one, but when the jobs market is doing very well, unemployment rate 3.6% in the United States. You look at different factors, all showing positivity, right? Jobs market, positive. Then the Federal Reserve looks at that and thinks, okay, well, if asset prices are falling, okay, that's okay because the economy is doing well. Price stability, we can get that down, and the employment situation, the supposed dual mandate, is there being taken care of. So if asset prices are falling, maybe they're willing to let it go. We will see. Toronto home prices slide for a third month on higher rates. Potential buyers are waiting for a bottom. Uh-oh. Prices are nearly 9% below February's peak. Sales activity falls as well. So here we have one of the biggest bubbles in the world, one of the biggest bubbles we have ever seen. And there are always going to be different areas. You look at Toronto. I mean, some of these places, imagine this. So you have the core, the financial core of the city, and then surrounding that, you have all these other cities really connected as one major city. But you look at the way it is and the way it's spread out. Imagine places that are literally 1 hour drive from the core. And we're talking about just generic houses in a generic place, nothing special, normal house. And they're selling for above $1 million, 1.5 million in some cases, and I've seen more. I'm talking about, just think about it. Normal house where every single, and this is an hour from the core and the, the more desirable neighborhoods. This is a big, I don't know how to say it any other way. This is a true bubble. And now some of the froth has been let out. Some of the air has been let out of this bubble. So we will see, does it pop or does it simply slow down for a bit here and then finds footing and goes back up? Well, I could tell you if mortgage rates are going to increase considerably, this is going to be a very big problem. Fed's Mester may back a half-point September hike if prices don't cool. You see what's happening here? You see this? This is September's talk. Why? Because June and July are basically a given at this point. June and July. Unless something's changed, crazy things change. But looking at that, that means we will be 50 basis points and 50 basis points. We are 1% higher than where we are today. Imagine 1% higher. It's going to be very serious in the United States, let me tell you. Black Swan Investor is watching for the greatest credit bubble to pop. Check it out. Okay, really quickly to end off today's video. I don't know how to pronounce the name. Mark Spitznagel is paid to be prepared for when the market's weakest links are exposed in a big way. This is the greatest credit bubble of human history. If the credit bubble ever pops, it's going to be the most catastrophic market failure that anyone has ever read about. But let's hope that doesn't happen. We've gotten ourselves into a tough spot. Oh no, he's not a doom and gloomer. Wait a second. Have you looked at the comment section? A good 20% of my comments say that. Anyway, he's long been critical of the central banks keeping interest rates at zero, and you see what's happening as a result of all that. You prop it all up and you create a big problem. But as they say here, Goldman Sachs, JP Morgan, they're warning about these things. Absolutely. And so they just get into that and a few other things. I just wanted to note that to finish off the video to make you understand that what we are seeing today is in fact massive. On any level, no matter how you slice it, no matter how you look at it, it's so extreme. And yet most people are going to let it just slide past. Big mistake. I think we should be prepared. I think we should take the steps today to make change to our portfolio, make change to the, where we spend our time. Are we spending it gardening? Are we spending it, trying to form good relationships? Or are we spending it on nonsense? That is totally up to you, but I think it'd be wise to do the right thing. That's all. Look, I've got information on Twitter, on Instagram, on TikTok that I am putting out every single day. Every single day. And you can find me at The Money GPS. Did you give this video a thumbs up? Oh my goodness. How can you not? Hit that thumbs up button to support the channel. I want to thank you for doing so. And don't forget to subscribe as well. We are heading from 282 282,000, all the way up to 282,000. Yes, that's right. Little inside joke for my friends out there. I'll see you on the next one. Take care.